All right, let's try that again. The mic was off there for a minute, guys. Sorry about that. We did just get the release of Canadian um, retail sales figures coming out weaker than expected, 0.5% print versus 0.7. Core sales coming in at zero point 0.0 versus zero point 0.5. We highlighted this level yesterday on the radar charts. Just wanted to bring it to your attention. 132.88 represents the reversal day close from that rally we made into the highs last month. A break through that, and you're really looking for a run possibly into 133.34, which is going to be the high day close for the year. So certainly with this push here, if we do get this break higher, opens up a rally into that key resistance. Beyond that, you're looking for that long dated 618 retracement at 34.58. So no plays on DollarCAD. Just as a quick disclaimer here, I haven't had anything on this one. I've been playing CAD through EURCAD. We got into a position on that last night, and we will go over that. So we go back to the welcome everyone to the room. Good to see you guys here today. Mark says it helps when we can hear you. Thanks for that, Mark. Sorry about that little glitch in the at the start. Eileen says, "Where did September go? It's the 23rd already." Yes, and we have less than a week before we head into October trade. So certainly some really nice positioning here. There's only a couple of months left in the year, guys. All these expectations still calling for a Fed interest rate hike is beyond me. But again, we're not here to ascertain policy. We're here to trade it. So we'll continue to look for opportunities here. I do have to take a quick note and tell you guys that a lot of the entries for the scalps and the trades that we've been highlighting on the intraday page have been panning out beautifully as far as the entries are concerned at the start or into Asia trade. Last night we were involved in EURCAD, still holding the dollar yen from Monday's entry, although we've shaved off a couple of lots off that. We'll take a look at the British pound, sterling yen, also coming into target here. And obviously the highlighted scalp, first one on the page was euro yen. And that's another one that's been playing out rather nicely. So as always, feel free to throw out your questions, trade setups, guys, throughout the course of the webinar. If you have any pairs that you are specifically looking at or you want to take a look at, feel free to throw it on the message board. Mark, great to see you, sir. Okay, so quick relative performance check before we get any deeper into the session. So you had some really terrible data coming out of China last night. Just want to go over that real quick. You'll see this in the headlines, I'm sure, today. A lot of people looking at that China PMI. We were looking for a print of 47.5, came in at 47.0. Remember, with PMI numbers, sub 50 means contraction, above 50 means expansion. So the fact that we are getting a contraction, deeper contraction than expected, certainly does not bode well for the Chinese economy. Keep in mind also that we do get two prints on PMI. The China PMI numbers that you're seeing here are actually released from the government, and then we also get the private sector read, and that's from the HSBC PMI numbers. Those tend to be weighted a little bit more because there's no government interference and yada yada, right? But the fact that the government's putting out a number at 47.0 is definitely going to fuel speculation of a continued slowdown in China. What does that mean? Broad risk remains on the defensive. Take a quick look here at the markets in Asia overnight. Europe's panning out pretty well today, but you can see Shanghai Composite was down 2.19%. You saw the Nikkei 225 down almost 2%, and again Hang Seng down 2.26%. So it's going to be interesting to see how this all pans out, guys, as far as the China story is concerned. But certainly, as for we head into the U.S. markets, it doesn't seem to be really shaking us over here. Futures are up about 45 points on the Dow, about 4.5 handles on the S&P, and NASDAQ with a gain of about 14 points so far. Relative performance against the US dollar looks like this. You have the euro top gainer on this session up 0.23%. Biggest loser, British pound, which broke support. And yesterday's intraday page certainly highlighted that support that we were looking at. You know, it was the first major support from the reversal that we saw off the highs. And we talked about it in the webinar yesterday, guys. The seasonality support for that trade continues to be a focus here for the sterling and the sterling crosses, to be quite frank with you. Overnight made 38 pips on the euro dollar long. Nice trade, Mark. Well done. I actually took a trade on EURCAD on the long, panned out with a similar trade there, but We'll go over those setups in just a moment. First things first, let's jump into yesterday's intraday update. So, Euro Yen was coming into an area of support. It's basically defined by this region here from 133 all the way up into 133.50, really, to be quite frank. Again, this is the stretch low from May. You have the 50% retracement. This takes into account the rally off the April lows, a 786 retracement from just that recent advance, and obviously the lows that you made for July comes in that region as well. The broader downside focus remains in play. Here's what it looks like on the intraday. And remember, we talked yesterday about the corrective slope. Eileen, you were asking some questions about that. Here's a perfect example of how that has again offered some guidance. So we noted that the last 10 corrections have more or less followed this slope, if not as resistance on the pullback, offering some support. So is such when we break it from the other side. So we highlighted this slope earlier in the week. We opened just above it. The break below that yesterday offered a drop right into the 786. That was 133.33. The rallying overnight that we were expecting offered us a nice short entry right back again at that former slope support, now resistance. And this remains, guys, the bearish invalidation level for the immediate downside bias, meaning if the US opening range comes into play and we see a topside break, I wouldn't necessarily be interested in trying to play the long, but we would expect a much more substantiated rally here to possibly look back on the short side. So checking the bearish invalidation level earlier in the session here, a 5-minute chart actually offered a nice trigger on it. I was looking at this earlier before the webinar, just missed it, but some divergence into the highs, trigger break. Again, targets are unchanged, 133.78 on the downside. Then again, we'll be looking for that 33.33 level. Quarter of daily TR is still about 35 pips on this one, so keep that in mind. And the deeper in time we get, guys, by the way, the slope that we were talking about, the corrective slope, starts to intersect or converge on basic trendline resistance off of last week's high, adding further conviction. If we see a topside break beyond this level, look for a little bit of a rebound recovery rally here for Euro Yen. Any questions on this pair? Again, I played the Euro yesterday through EURCAD. Dollar Yen, also still a trade of interest. I see Mark here wants to take a look at Dollar Yen. It wasn't highlighted on the charts, guys, but I didn't think I'd wanted to be redundant. I know that if some of you on the swing side of things, didn't need to see that all over the place. But here's what it looks like at this point. We can take a quick segue here since we covered Euro Yen. Here's Dollar Yen. You're still in the consolidation phase. Excuse me. You're going to get a whole lot of chop. I'm kind of regretting the fact we had an opportunity to book 63 pips in overnight trade. Didn't take it. Went to bed with a limit at 119.60, guys. The low was 119.61. So it didn't get triggered on that either, which is very frustrating. But we have to keep in mind what we're trying to push through, and that is, namely, the yearly open. Okay, 2015 open comes in at 119.88. You can see how many days we've tried to break below that, unable to. Doesn't mean it's not going to. It just means from a scalping standpoint, we really should be a little bit more nimble, okay? Coming in support, close that short. I'd still rather be on the short side. The invalidation level for me is getting clearer and clearer as the days continue to pass by. 120.80, which was and has been the scalp bearish invalidation level, continues to be defined by the 200-day moving average, continues to be defined by that basic trendline resistance off of the highs from that swing in late August. And as long as we stay within here, guys, you want to be nimble on the scalps. All in, all out is the best way to get in on Dollar Yen. So here's what it looked like yesterday on the intraday. Who's messing with my levels? All right, so again, the initial entry at 120.40 or so that we took earlier in the week, we booked to the first portion of that. You guys saw that yesterday, about 50 pips. Again, and overnight on the open of Asia, really nice drop. The low 61, 61 fractional 2. So we didn't really get into the handle and we didn't get that limit triggered, but here we are again checking the near-term bearish invalidation level. So the immediate bias shifts to 120.80 essentially if we break above this region here today. Still holding the short. The stops are at 20 pips in the profit, so I'm not really worried if it does go against us. Obviously, base case scenario is that we do see a hold here. So you start to see stuff like this, a little bit of a trigger on the short side, but not much follow through. Gets me a little bit concerned. But we'll look if we can see a clear definitive cut of the US opening range, really tight so far. And again, initial target still remains at 119.60. I still have the limit I've pushed out from now just because I'm monitoring the trade. So if we do see some push behind it, my next target to the downside is just above this region, which is the median line off the highs. A longer dated median line for the broader structure that we're looking at, right? That's this thing. And you also have a basic confluence with a 786 retracement, and that takes you down to 119.22. My limit at this point is just ahead of that, 119.30 or so. All right, so we'll see if we can't get this thing moving. Chop City is the name of the game still. Hindsight's always 20/20, but we'll look to see if we can't clear out of that short position if we get back towards that 119.60 region. Mark Haberman saying, I knew there had to be something holding it up, the yearly open. Yeah, Mark, I mean, that thing just, it fit. Look at it at a close basis, right? That's how I know that there's something sort of blocking this decline here. And especially on the fact that we've probed through it so many times and unable to make that move, just really puts the focus on it. Maybe not as an intraday target, right, Mark? Maybe not an intraday target, but on a close basis, when you're trying to ascertain bias, you're going into the Asia session. Did we close below 119.80 or not? That's what I'm looking at. Do you know what I mean? On an intraday basis, you might sail through it 4 or 5 times. But to be able to call the breakdown, I need to see that, finally give us that close. Mark McDowell says, what limit is your target on dollar yen, Mark? So on dollar yen, I just told you the target, at least for the initial scalp, should still be 119.60. And if we get down there, I will peel off a half of what's remaining on the trade. My final target, at least on this initial move, is down here at 119.20. Like I said, that's a big confluence region on the near term. That's this right here. So, and that's, Mark, that's just playing it within the confines of this consolidation. Do you know what I mean? Once we clear that, we'll have a much more clear-cut definitive bias moving forward for a medium-term sort of position. But right now, I'm just playing inside the bounds of this formation. Mark says, yes, I need to see it close. Mark McDowell says, okay, thank you. Anytime, man. Good question. All right, so I'm losing a little bit of confidence in it because the momentum signature after giving us that 40 break, it's now starting to go drift 60-40, 60-40, which is more of a lateral market. That being said, like I said, we can probably squeeze out another move here. And that's dollar yen. Any questions on dollar yen before we move off? Still a favored play for a range type of scalping condition within the confines of this formation. And again, the broader bearish invalidation level is still going to be with that 200-day moving average trendline resistance. All right, back to yesterday's intraday update. The next one on tap was sterling yen, keeping with the yen theme. And certainly on a day where we don't get very strong risk off, guys, so if we do get, for example, markets starting to rally a little bit more aggressively into the US Open, it's not really going to be a very strong tell for yen strength. So we could see some of the yen pairs pull back a little bit, but the major operative levels are very, very clear. Here's British pound. We talked about this at length yesterday. I even highlighted in the update here yesterday where you can find that in the webinar as far as the pound dollar. This is pound yen. And again, Something I highlighted on Daily FX yesterday. Here's what it looks like on the daily so far. And here's what it looks like yesterday. So the reversal that we saw yesterday was pretty big because of the level that it was coming off of, and because it was a basic and clear-cut break of the weekly opening range. So an objective view. And whenever I find myself questioning my bias, should I be bullish or should I be bearish, I just take a step back, take a sect of time, whether it's a monthly chart or whether it's a daily chart, whether it's a weekly chart, and just look at the basic opening range status. And if we look at the weekly opening range, it was a clear-cut high, low, high. We broke it. Downside bias remains in play. It just so happens that that spill yesterday took us below the median line for the operative structure off the highs. And that's what changed things and kept the bias weighted to the downside. Here's what it looked like on the intraday charts last night. And the bias was weighted to the downside while below the 85 handle, this region. So we were essentially looking for a little bit more of a rebound here to get back on the short side, targeting 184.19, 183.28. Subsequent support and key support here at this confluence at 182.86. So right now we're coming into the 183.30 level. Here's what it looks like on the intraday charts. Never really got that rally, okay, back into resistance, but it doesn't matter because you had a clear-cut trigger here in momentum on the near-term charts. Put shorts into play. Again, you're coming into the initial target here at 183.30. On a trade like this, you still have to leave the bearish invalidation level there at 185. So no change to any of the levels, no change to the bearish invalidation level. You're coming up on bigger support down at 182.86. But short side is still favored. Here's what the intraday looks like for euro yen, or excuse me, sterling yen. Okay, so as we get into that support, watch for that break here to chart some sort of recovery. And then again, there's not much by way of new short triggers from here on out. So you're going to have to be a little bit more attentive to the open of US trade to see if we can find another short trigger to get back in this. But as it stands right now, look for this drop into 183.28, 183.30, a little bit more critical support at 182.90. Eileen's saying the video. Okay. Yeah, keep me updated, Eileen. Guys, if there's any issues ever with the video, go to webinars, the best there is. So let me know. It's probably some sort of tweak I can do either on our side or your side. Cameron, we're definitely going to look at the sterling, the British pound next. It broke that major key support we talked about yesterday, right? So we'll definitely take a look at that. Any questions on sterling yen? Still like the short side, coming into the first hurdle of support here. Downside break. More importantly than the 82, which is what I also highlighted yesterday, look at these median lines, and those median lines coincide a little bit better with the scalp targets. So keep that in focus. Again, quick reminder to anyone in the room, if you're newer to SB, you can always take a picture or take a snapshot of any of the charts that you see here by clicking on that camera in the top right-hand corner. Eileen says, sterling yen, you're looking for a rebound before the entry. Where would the stop be? Yes. If you're not in a trade already, if you're not short already, Eileen, I would be looking for a rebound before entry. It depends where we get the trigger. If we get the trigger near 84, if we get back up there, the stop would be against the U.S. session highs from yesterday. Well, I guess it wouldn't be the U.S. session highs, but it would be against this swing high from yesterday, so it would be against like 84.70. If we get the trigger higher up, the most ideal stop would be above 85, which is going to be that median line formation. I tried your idea, Eileen. I was looking at the trade setups the other day, and I was trying to see if I can give you where stops would be. But again, it depends where the trigger comes in. So if the trigger comes in ahead of this level, yeah, it's going to be against this high, right? The highs for Asia, or this is actually the high for Europe. If the trigger comes up higher up, I can put my stop against the 85 handle, against that trendline resistance. Eileen, if we get a US opening range set up here and we get a downside trigger, the stop could be just against the US session highs. You know what I mean? It's all about where you get the signal and where you can put a stop that keeps and maintains that quarterly ATR. So it's hard for me to just put an objective stop because I don't know where your entry is, and I don't want you guys just putting a stop and jumping into a trade without keeping that risk management in focus. Eileen says, okay, makes sense. Thanks for me choices. I'm not sure what that means. Thanks for the choices, saying. Okay, sorry about that. All right. So sterling yen still favoring downside. Hopefully we'll get this a little bit of a rebound and allow us to get back in. But I do want to take a moment and go over sterling dollar. Euro yen's out of the way. Sterling yen we got. British pound, and then we'll go over the radar chart. So sterling was even a cleaner move. Again, here, the idea last night that we talked about is that we're coming to the first area of support. We sat on that right into the close of U.S. trade, right into the open of Asia. And the ideal scenario would have been to get a rally towards 154 to try to press the short side. You didn't get the rally, and you got a simple and clear-cut break of that key support. Your initial targets are right down here at 52.67. Followed by 52.18. Here's what the British pound looks like right now. We talked about this one at length yesterday too on the webinar, so I don't want to get too in-depth about it. It's probably been the cleanest trade out of the ones that we've been following on the intraday page. It's been a one straight shot ever since the break of that formation, ever since the break of the pivot at 54.60. This was huge. This was huge, and this was the region that we were talking about that we were sitting at yesterday. 53.40 is going to be the monthly open. I'll bring your attention to this median line, again, which dates back years to the 2013 January open high. I think it actually might be the December high for 2012. But, you know, this has come into focus multiple times this year, and clear-cut pivots on every attempt to make a move through that. So that came in line right with the monthly open. A break below that, you're now right back at the next support target, and that's the 786 confluence with the basic median line off of the lows for the year. Here's what it looks like on the intraday. Okay, so initial targets at 52.67, we just took those out. Next subsequent support target is down here, and that takes into 52.30, 52.20 region, a little bit lower from where we are now. Excuse me, guys, let me just snap these lines. So Eileen, to go back to your question, where would the stop be here if we do get a rebound to offer some new entry? This one's even tougher because you didn't really get a concrete high for Europe that puts you anywhere near where you need to be, right? It's got a 30 pip quarter ATR. The European highs come all the way up at 53.40. So I would say this is still the near-term bearish invalidation level gets dropped from the 154 handle right here into 153.50. So unless we get some sort of significant rally, we can trade against the U.S. opening range high. There's really not much of a play here to jump on board for a new trade for sterling. If you're holding that scalp, I'd be looking for that drop into 52.20, cleaning that up. At that point, you want to pull some off the table, bring your stops to break even, if not just above 52.67, and see if you can get a breakdown even lower into 51.70, 51.62. That being said, we'll have to look for reentry. Again, I missed this one as well. Most of the focus was on sterling, yen, EURCAD, and dollar yen. So see if I can get a little bit of a play on this one. Healthy ATR, 30 pips, not bad. Smaller than the sterling yen, which has a massive quarterly ATR of 60 pips. So just put things in perspective here. We are testing near-term support for the British pound. Any questions on sterling dollar? So again, no change to the levels. Drop that bearish invalidation level down to the 153.50 level now. All right, so those are the three highlighted scalps from the intraday charts. I do want to take a moment to go over the radar charts from yesterday. Aussie dollar. Dollar CAD, we talked about that just at the open of the webinar. That's obviously going to be dependent if we make it through on a close basis, that reversal day close. And then EURCAD is the trade that we got involved in yesterday. So here's what Aussie looks like on the daily, and then we'll jump into the intraday. So the only thing I wanted to highlight here is basic trendline support off the lows was sort of the target that we were looking at yesterday as support. Do you think we are heading towards a new long-term low, Christian? Christian, on what pair? On sterling? In the British pound. So I don't trade like that, Christian. And I'm just being completely frank with you. I'm not trying to dodge the question. I don't trade whether I think this move is going to be the move that's going to be the start of a new low for the year. I play in terms of conditions, right? Where either the market is in a bearish condition right now, I should be looking to sell rallies, or the market is in constructive condition now, we should be looking to buy rallies. I can tell you that from what we looked at yesterday, I can tell you that what we looked at yesterday, if you guys remember, the seasonality charts supports some weakness in the British pound moving into October, late November. So whether or not that achieves a new low is, remains to be seen. I personally think that we might finish the whole year still in this range, just on the count of expectations for a Fed hike beginning to diminish. And then if you look at the central banks across the globe at this point, who else is better poised to begin the normalization than the BOE? They're actually next up on deck. So if you ask me, Christian, I really couldn't give you an answer with any type of confidence that I would want you to sort of act on. I can tell you that right now, for the next few weeks, I'm in the mentality of selling rallies, specifically below 54.50, 54.60. If that starts to make a move back towards there, I'd be looking for shorts again. There's not much to be super constructive on. This is the last upward slope we're working with, okay? And if we break back below that low that we made for the month, it pretty much solidifies the move into this slope. And that's going to be the operative slope from here on out. Did that make sense? Christian? You're at a real pivotal point. If you're trying to position for either a new high or a new low for the year, you're probably at the worst possible juncture, Christian, just because you're right in the middle of the yearly range. You're not near the high, nor are you near the low. There's nowhere to put a conviction stop. From here, I really wouldn't be positioning for a necessary stretch into a new or higher low for the year. He says, sure, I get it. Thanks. Anytime, Christian. Looks like we're going to see that 52.18 target earlier than expected, so watch that drop. All right, so Back to the Aussie real quick. Here's what the Aussie dollar intraday chart looks like. Here's what it looked like last night. All right. So we were sitting right around that 70-80 level. The bearish invalidation level was held steady right at this region here into 70.95, which was basic trendline resistance, just a basic channel resistance. And you didn't even get a run on that. Again, here was the test of it as resistance as far as that 70.83 level. A downside trigger puts you short against the highs. This was obviously the Asia data that came out, guys, the Chinese PMI numbers, which were much weaker than expected. And then you saw that finally take out that final target at 70.37. From this juncture, bearish invalidation still remains unchanged, essentially. You can drop it down a little bit towards 70.75, 70.70. But if we break back above this, I just want to highlight that that's a basic trendline support that dates back to the monthly low. So if we do make a pivot break above here, look to play the recovery. That said, you put in a Monday high, you expect to see a Thursday, Friday low. So break of the lows, you're looking for the next subsequent downside target right at 69.80. And that coincides with channel support into the close of U.S. trade, open of Asia tonight. So no change on the Aussie levels. Another trade that continues to stick with the levels rather well. So that is Aussie dollar. Any questions on that, feel free to throw them out. The next one on tap was DollarCAD. We talked about that. I see a question here from Andrew saying, DollarCAD, can we look for shorts at resistance 60 holds on the 4-hour? Let me take a look back at what we're doing right now since that release. Oof. No. So we broke through. So what we said earlier, Andrew, I don't know if you missed it. Well, we just broke through the reversal day close. Okay, you got some real weak retail sales data out of Canada just a few minutes ago, about a half hour ago. That's DollarCAD bullish, right? So you'd be looking for resistance. The last ditch effort would be 33.34. That's the high day close for the year. Look, I wouldn't be interested in shorting this at all. That's just my humble personal opinion, Andrew. You're fighting a steamroller engine, man. This thing is just not having any downside. Objectively, if we do top that side or top that resistance, it's also an objective break of the monthly opening range. And we're in the 23rd of the month. So you can expect to see, again, a little bit of a run through. Past 33.35, I don't have anything until 34.57. Even on the scalp chart, it's just a soft target up there at 34. But 34.57 is the real target. So it's just not something I'm interested in trying to short, Andrew. If we close back below 32.80 and we get a pullback to that magnitude, you start getting some short triggers, I might dabble my feet. Momentum's coming into resistance here on the daily chart. But beyond that, not really interested in trying to fight this. The other trade from last night, the EURCAD is what I wanted to talk about. So EURCAD last night was coming into a sweet area of support. You have a really nice confluence of a basic trendline support that dates back to the yearly low from April. And then a nice median line formation gives you the lower median line parallel, came in right at that same region, 47.16, 47.17. Here's what it looked like on the daily. And here's what it looked like on the intraday. Okay, so you'll hear a funny story here. We got into a long position right here on this trigger break. We got 47 pips was what we were showing as a quarter daily ATR. You got a real heavy turnover in momentum, okay? And we just booked a 25 pip profit on it. As it came back, stops were 3 pips in. It got stopped out on the way back, and you got a deeper penetration into that region of support overnight. This was the ideal opportunity, okay, on a break of the European opening range, on a dip into this region to get back on the long side. So while the rest of the core position did get stopped out at break even, essentially, the idea is still sound, okay? Look for that 14.23 break. That's what we're getting. Next topside target is 48.70. So had we still held that position, this would have been the initial target. We would have taken off a little bit more. Ultimately, we're looking for a 38.2 at 47.70, which would coincide with that swing low from Friday. So, oops, here's what it looks like on the 5 minutes. EURCAD and EURCAD. So this was sort of your ideal entry in overnight trade. It wasn't wasn't the prettiest trigger. Let's just say that. There was one that I looked at earlier today. Oh, it was this one. That was much more convincing. It's on the 1 minute chart. So in a lot of these trades, especially, guys, the trades with the larger ATRs, so if you're looking at something that has like a 35, 45, 50 pip ATR is what your profit target is, go back, go deeper into the 1 minute chart. Don't be scared. If there's a compelling trigger there and the trade is at support, those are going to be actually some really nice pinpointed entries that I've been able to hit over the last couple of weeks. So when market conditions widen out, when you're dealing with a pair that has a little bit larger of an ATR, go ahead and jump into those 1 minute triggers. They'll get you some really nice entries. So a trade that's still on the menu. Unfortunately, we're stopped out of it. We're looking still for that move, like I said, to 48.73. On the broader trade, guys, I do just want to highlight that you're just coming off this support confluence. You really have no conviction yet of a broader medium-term bias. In fact, this is one of those pairs that has simply set a very compelling monthly opening range. We haven't broken it yet. Last month's opening range break came on the 20th. That charged a huge break. So here we are on the 23rd. We'll want to see either a concerted move below this, in which case you're testing the opening range low, key support Fibonacci confluence, basically 46, or a break of the highs, and you look to target that median line and back up into 54.46. In the meantime, we're playing the range. Any questions on EURCAD? Aline says, I'm back. Really need to set up a redundant system. Good to have you back, Eileen. Mark says, oh man, DollarCAD not moving. Strange. Yeah. It's going to be like that for a while because if you look at the market, risk market right now, Mark, equities are actually starting to turn a little bit more on the positive side. That's yen negative. And the dollar has just not been able to do anything on this front. So let's just take a relative look at the dollar index. So the dollar is pushing into some resistance. We noted this resistance yesterday and we popped right through it. If you remember, 12,028, we closed just above that. That's actually the monthly open. Next area of resistance was 1246 at basic 786. Here we are. I'm going to clean this up right now, guys. We don't really need to work with this retracement or focus on it just as much right now. So I'm going to get rid of it. But the point being, excuse me, this is just a simple sliding parallel for the operative slope that we were trading in for a couple of months on the dollar index. If you mirror that slope to the lows that you made on that outside reversal day from August, it was the exact time we just hit. So, which is why a lot of the scalp setups you've been seeing have been a little bit more on the crosses side, not so much focused on the dollar pairs per se. Just because this thing has seen a strong ripperoo from the lows last week, which is interesting because essentially the Fed came out and said no hike, and here's the dollar ripping through the highs again. So a little bit more cautious on the dollar crosses. Mark saying, yeah, I'm afraid it's going to go upside. It very well could. Like I said, the stop is in break even. Actually, the stop on this one's like 20 pips in the money, so I'm not really worried about it. Mark, just because the dollar index is rallying too, it doesn't necessarily mean that we're going to see dollar yen run. I'll put that out there. And in fact, I'm still not buying the fact that the dollar is going to necessarily break into new highs on this initial move. The argument for the Fed still tightening this year, I think, is very, very difficult to make. And it's interesting because you had so much of the market pricing in September hike that initially evaporated. And now you're getting all these expectations starting to move into December again. Maybe I'm a pessimist, but you tell me over the next 3 months that we're going to see the global economy find a massive rebound in such a way where you can expect to see the Fed move on rates at Christmas time. Well, again, you'd be more of an optimist than I am. Let's just say that. That being said, here's what the dollar index looks like on the near term. It's actually a little bit more interesting on the near term because the levels that we highlighted last week have essentially played out pretty well. Next soft target is 12,071. That's the reversal day close. But you can see how strong the uptrend has been. We haven't even gotten a dip below 50 all week long. And that's not a trend I'm going to try to fight. So for those of you looking to fade dollar CAD, for those of you looking to initiate new dollar shorts, let's look for a little bit more of a conviction turn here on some of the dollar crosses before we start to fight it. The dollar yen short that we took earlier in the trade in the week, that was here. And that stop, actually it's funny because in overnight we came just literally pips, right here, literally pips away from that stop and it didn't trigger. So maybe it's better to be lucky than skillful, but in any event, that's a tell too. Mark, I can look at it on both sides. The fact that dollar has been rallying and dollar yen has been unable to participate of any magnitude at least. Hussein, great to see you in the room, sir. Also, a quick look at the seasonality charts, guys, something that's there for your benefit. Feel free to take a look at these. They're on the long-term page on the right. You'll see that seasonality chart. If we take a look at the dollar yen seasonalities, it's very similar in that you expect to see some weakness heading into October, November trade. And the analog would suggest, again, that we do see some sort of hold here as resistance. All right. Hussein says, would like to know how to log into IDO search. So we are producing those how-to videos this week. Guys, it's very, very simple. You shouldn't have any issues. You click on IDO search and then just simply click login. That's it. It's going to open up a new tab. If you have a pop-up blocker, you might need to hold down Control or shut down your pop-up blocker on SB to allow this page to launch. That's the only issues you could possibly run into. Everything, we went at great lengths to make the login completely seamless for you guys. So there's no additional passwords, no additional names. He says, I think when people click on IDO search, not log into SB Trade Desk yet. Oh, that might be happening. Thanks for that, Mark. If you guys aren't logging into SB, okay, and you're going from IDO search here, yeah, it's going to take you to the IDO search page, and you're gonna have to log in on that. Make sure you log in first, and then you just click on login to IDO, and it's gonna go ahead and launch the page. The watch list, or the insights page rather, is more of a broader view of what's moving the markets, what just got reported from the earnings side of things, equities, futures, and currency highlights. The watch list for our purposes in FX are really gonna highlight the best returns on specifically, looks like we don't have anything on the 1 day. Okay. These are the glitches that we're trying to work out. So it's good that this is happening now. But these are the watch list is what's going to highlight and rank the currency stats specifically. Explorer is going to be anything that you've opened as far as tabs over the last couple of sessions. It'll keep that on date for you. So you can kind of refer back to that. We'll go way over a lot more IDO stuff later in the week, guys. Jamie's webinar, don't forget, is today at 1 p.m. So right back here, Jamie's going to do the midweek strategy webinar, go over the current positioning and setups he's looking at as well. Hussein says, thanks. Hey, you're more than welcome, Hussein. Glad you're enjoying that, or I hope you enjoy that. Actually, hope you're able to log in, no problems. So those are the setups, guys. If you have any last minute questions or trades, do throw them out on the message board. Dollar yen, EURCAD, sterling dollar, and euro yen are the ones I'm personally getting involved in. I'll be watching for Aussie dollar, specifically as we break that trendline support. If we do continue lower, like I said, the bearish invalidation level remains right at that 70-80 region for now. We'll look to see if we can get below that 70.37. And the pound, while I'm not really crazy about jumping on new fresh dollar longs, which is what the pound short would be, I'd be watching for a hold at 82.18, somewhere down that region. If we get a rebound, we'll see if we can't get back in this one. And to be quite frank with you, if dollar yen starts to move nicely to the downside, I'd be much more interested in a pound yen short. Much larger ATR. If we get a decent rebound there, I think you can get a decent entry on that one. As far as event risk is concerned, we're pretty limited for today. There's some comments coming out of Fed officials. The biggest comments people will be looking for, guys, over the next 24 hours will be Janet Yellen tomorrow. She will be speaking, and it's going to be interesting to see if she takes a little bit more of an approach that markets may have overreacted to the Fed's hold last week or not. I personally think we heard a mouthful from her, and we kind of got the gist of what she said at the last FOMC meeting, but there's been a lot of bank research and a lot of guys I'm talking to on the desk who are kind of looking to see if they can get a little bit more of a tell tomorrow when she speaks. So keep that on tap as well. All right, so we'll wrap it up here if there's nothing else. Guys, like I said, 1 o'clock, Mr. Jamie Setley will be on board with the midweek strategy webinar. Watch this open. It's going to be interesting to see as we head into support on some of these trades, guys. You could get some kickback. So we'll be watching the 9:30 open in just a couple of minutes here. Best of luck trading, and we will see you tomorrow. Cheers.